So today is May 21st. The month of May is almost over. We have had a better May than we've had in a long time. Statistically, what I was looking at over the last 4 years, the average move of May is roughly 3 to 4%. And so that's something that we have seen. um, Generally, election years tend to be more choppy, and May can be choppy, but over the last few years, we have seen a stronger move in May. And actually, it turns out into if when May's strong, the summer kind of can tend to be pretty decent as well. Seasonality wise, going into the summer, we do kind of see a lower volume and a lower ATR. And so I'm going to show that. Here you go. Oh, what? Oh, thank you, sweetie. Oh, one sec. My daughter just asked me for milk. Smart daughter. All right. So, what I was saying is in May, June, July, August, you tend to see the ATR, which is the average true range. So, you see the ATR drop a lot. And so, intraday moves are going to get smaller. Generally, that tends to be kind of normal towards the summer. And then you see these kind of as we enter after summer, we pick up. September tends to be a more of a down month. Almost every year, September is a down month, and then bottom in the middle of October, and then rally for the end of the year. That's just a seasonality thing that we've seen going back in as long as I've traded. It's happened. And so going here, I do want to show this ATR change for the Nasdaq over the course of June, July, and August. So right now, the average true range over one day is 232 points. So that what that means is the high of the day to the low of the day on average is 232 points. That's the range for the day. So now if we go back here, and I want to do it on a daily chart as opposed to a weekly chart so we can see the daily ranges instead of just a weekly range. But it shows up very, very heavily on the weekly chart as well. So whenever we see this, where is it right here, you can really see when it happened. So there's May, so there's 2023, May, right here. May, June, July. Last year it kind of averaged out and came up weirdly enough, but this is what is normal, what you see more often than not. Daily average ranges for Nasdaq. Is that for how long does that go back? Casino baby. 9/18/2023. Okay, yeah. So I'm looking for more in a larger time frame. So look at May. This is the May right here. And then this is August 2022. If you just look at the ATR, so I'm going to bring up the ATR. We're going to ignore anything that price action does specifically, but we're just going to look at the average true range. So your average true range in May went from 400 points a day to 200 points a day in 2022. So essentially didn't get cut. It essentially got cut in half. Go to 2021, May to July, August. Here's May, middle of May. Here's September. Our low, there's the middle of August. Here's the end of August. So notice your ATR is going 200 points to 160 points, 270 points to 164 points a day. So we're seeing a general drop in just the amount of movement in one day. This one in 2020 is going from you are a fucking mess. I'm gonna have to give you a bath. And 2020 is going from 200 points a day to at the very beginning of September 205 points a day. So it's 280 to 205. So you're seeing this is just over the course of 4 years is what I've done now. And I can go back in time more and more and more and show you examples, but you kind of get the picture. You're seeing a heavy drop, almost about 30 to 40% in just your average true range, regardless of what price action does. So, as day traders using futures, what does that do for us? Notice here, 2018, May to September, drops 140 to 80. So now we're going back over 5 years. So I don't want to continue to beat a dead horse. But as day traders, generally when we use an orb, we look for 2 to 3 standard deviations. Now with this, you're going to get hopefully smaller orb ranges. This motherfucker. You're going to get smaller orb ranges, opening ranges, smaller pre-market ranges, and then you will be looking to target smaller targets. So probably 1 to 2 standard deviations as opposed to 2 to 3 to 4 standard deviations that we have used in the past. Generally, we do see a strong move in the summer for election years. Let me get my book real quick and I'll tell you some statistics that I noticed. And this was me just kind of reading the charts and the statistics um, that they give in the book. And it's a little more than just seeing it, it's really reading it. Because anybody can look at this and say, oh, okay, boom. But in May, since 1952, we have had 4 Mays in election years. There are 18 precedences, 18 times. 4 times has May been red. Out of those times, when May is green, so when May is green, we have a green May, so I'm not going to worry about the Mays that are green. So how do you peep ATR? Somebody just asked me that question. You go indicators, ATR, average true range. And that's that right there. What that is, that tells you the high of the day to the low of the day. And that's just a very easy, simple indicator that I use every single day. And so the Mays that are green in election years, you have only had 1, 2, 3 years that out of 18 times, well, minus 1, 2, 3, 4, so 14 times, there's been 14 green Mays since 1952 in election years specifically. Out of those times, you have only had 1, 2, 3 times where June has been red. Out of those times as well, you have only had 1, 2, 3, 4, 5, 6. You've had 6 times actually more that July was red. So what that means for us is more likely than not, June is going to be green. The higher we have a higher probability that June is going to be flat to green versus red. You're a fucking devil child. Good God. So, more likely than not, June is going to be green. And then there's only been twice sent from May to December where you buy in May and you sell in December. This is S&P 500 specifically, but you can interpret it if 75% of stocks follow the stocks S&P 500. So most likely if the S&P 500 is going up, your stocks are going up. And so there's been twice since 1952 where if you buy in May and sell in June or sell in December that it's red. And that was in specifically 2000 and 2008. And other than that, every single time you have an average of a 5.8% gain going from May to December. In my opinion, whenever we see these percentage gains, our market right now is a little bit of a higher beta than a normal market. What tends to be stronger in election years? Dow, Russell, small caps, or low caps? Um, Actually, that doesn't say. I would say Nasdaq is most likely going to be the winners. when the S&P 500 continues to go up and the market is in more of a bull market risk off scenario or risk on scenario, then more times than not, the Nasdaq will be the leader. You will see more growth stocks. You will see more Nasdaq stocks leading the way in these like heavier bull markets that we're kind of anticipating. Semiconductors specifically, when the Nasdaq goes up, or when semis go up, the Nasdaq is much, much more likely to follow. And so semis are kind of your tall tale of is the Nasdaq going to want to come up or not. And let's get a full, I'll get you the exact percentage casino baby. 1 second. So on average, on election years, the Russell closes the year 6% up. On average, election years, the Nasdaq closes the year 9% up. The Russell 1000, so that was mid caps, not small caps. The average for small caps, Russell 2000, closes the year 10% up. S&P 500, 6%. And then for the Dow, actually, Dow tends to be one of the winners from 1950 to 1952. Nope. This is about just under six, so about 5.5% of a gain on average for election years for the Dow. So again, the Nasdaq does have the largest winner for the election years being a almost 10% gain on average. 19, so S&P 500 just under 8 from 1950 to 1922, from 1950 to 2022, and then Nasdaq was made in 1971, so you don't have quite as much data, but the 1971 to 2022 you have about a 9% gain on average during an election year. Weirdly enough, during an election year on or non-election years, on average for the Nasdaq are actually a little higher, but there's actually weirdly a less probability to continue to stay higher because election years have the highest probability to close the year green. So yeah, we're looking for most of the time the semis are going to be the leaders. And that's what we've seen. That's what we've seen in the past. That's what we usually see. Right now, what's happening? All eyes are on fucking Nvidia. Who led the market? What broke out first in 2023? Semis. They were the first ETF to get to all-time highs. They were first ETF to break out, and they are just building a beautiful base during a previous uptrend. So semis still looking incredibly solid. The leaders that I would look for. So what I go over a lot and often is buying leaders over the laggers. You don't want I don't personally, I'm not looking to buy something that's down on the year and not reached all-time highs. People get scared to buy all-time highs, but when it's coming out of a sound base where it's a consolidation base after a previous run-up, statistically, these stocks have the highest probability to continue higher. So I'm not looking for something like or on semiconductor, Intel, fucking any of this shit. LRCX, solid sound base. Right now, they just they just talked about doing a buyback, announced a buyback program that shows they are bullish in their own company. They also announced a 10-to-1 split, which will bring LRCX down to $100 versus the $1,000 that it's at, which will make it more tradable to the public for options as well. Very, very something that I'm very, very looking forward to. I think this stock is going to do pretty well if the market continues. KLAC, another semiconductor. Look at this. Very sound base. Very, very solid. Look at the accumulation versus the distribution. We do have, and then this is what's really a key. And this tight action. Notice how the average true range over here is very, very Very, very wide and loose. You see just kind of whipsaw up and down action, heavy moves to the downside. And now over here, notice right on this day, your average true range goes from 22 points to 18 points. So it drops by 40%, 30% or so. 20%. And so this is going from, and that's during this portion. Notice this tightness right here. This is what you want to see. This is what we're looking for. This tightness shows institutional accumulation. And that's where, when you see tight action like that, and another good example is NVIDIA, I'll go into that next, that shows that institutions are getting ready to are getting ready to push this stock higher. Notice here we had a strong day where we almost broke out to all-time highs. Thank you for my wallet. I don't know why you have it. And then another breakout day. Well, actually, this was an accumulation day, which I went over this morning. Accumulation days are days on higher volume than the previous day. Up days on higher volume than the previous day. Right here, this is an accumulation day. Right here, this is an accumulation day. Right, that is not. And so those are what accumulation days is. And we're looking for accumulation days to show to show their hand, to prove that. And then the breakout you want on decent volume. You have a good volume on this breakout, and then it's continuing higher. NVIDIA is really, of course, going to be whatever happens to NVIDIA tonight after hours in 30 minutes, 40 minutes, that's what's going to move the rest of this market. Next, NVIDIA. So KLAC, LRCX, those are two leaders, and obviously NVIDIA. This is the number one leader in the sector here. Look at your average true range, and look at your, not even if you don't have the indicator and you just look at the candles, just eyeball it. Look at the candles from start right here, just put a line, a character change. We talk about the change of character in a sense of a market structure shift, but also when you talk about change of character, you can talk about change of character in the price action and the way the stocks move. So look at here how on this side, the left side of this base, so the base being from this specific day right here, I'm going to put it one before so we can see that candle. So the base being from this day to where we're at right now. Theoretically, we won't break out of a base until it breaks the high. So we are currently in a base right now. But look at from the left side of the base to the right side of the base. Notice the candles. The candles are heavy sell volume, heavy sell candles coming down, very wide ranges from high to low, and pushing to the downside, kind of displacing. And now after this day, we find our low, boom, we come up here. We have a lot more tighter action where we gap up, respect that gap up again, respect that gap. That's huge key. When you gap up like this, that means institutions are accumulating these stocks. When you see gaps and the gaps get respected, institutions are here. Institutions are not selling. When they are selling, you'll see a heavier volume. All through here, this was institutional selling. This day right here, a down day on heavier volume than the previous day. That is called a distribution day. And so that's where you count your distribution days or weeks versus your accumulation days or weeks. And that gives you an idea of how much institutions are accumulating versus distributing and then you can use a lot of the ICT stuff that we learn as well. You're displacing above highs, you're holding these gaps, you're getting tight action, you're expecting bullish order flow. And I mean, earnings is a crapshoot, so anything can happen. But if this could not have earnings, this looks phenomenal. We have very wide ranges here. Notice this shelf. This is just what I'm going to call it. This is a shelf, a high handle, whatever you want to talk, whatever kind of you want to say about it. Consolidation base. It's under 4%. And that's a huge key. Notice over here, you're having, what's the 1 day's range of this is 5 or 6%. Yet then we had what, 5 to 7 days, 6 days, 6 trading days under 4% price action, where every single day is closing very, very close to the next day, within 1% for closing ranges. Again, institutional accumulation. And you can look at this in any chart. It doesn't have to be stocks. It can be crypto, whatever. And so this is where, and then once it breaks out, you're looking to go to one standard deviation, bare minimum. I think it's the easiest, the quote expected move. Stan Weinstein wrote about this in his book, expected move. So on a larger time frame, a larger basis, you're going to want to, especially if you're in equity, 1 to 2 standard deviations is what you're looking for. If you're in options, especially shorter dated options, you're just looking for the half standard deviation, and that's going to be about 1075. Round numbers are wonderful as well. Was it Jesse Livermore? It was either Jesse Livermore or Nicholas Darvis. I can't remember exactly who it was. One of them talks about how when you get through a round number and you get displacement through a round number, most of the times you go 10 to 15 points higher than that round number. So let's say we get to 1100 and we just displace past, we're most likely going to 1115, 1120. A good example was right here. We broke this 500, displaced by it, and that same day we were up at 520 by the time that day started, by the time that day ended. So a lot of times once you get past those really round numbers, that's where you'll start seeing a hit right here. Again, displaced above 600, immediately that same day, you're at 625. So I would be looking for at least 1075 if we continue bullish and if Nvidia knocks it out of the park. The problem with Nvidia, it has very, 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 very high expectations. So the key question is, can they beat expectations? Because if they just meet expectations, it will probably just be sideways, and that's perfectly fine too. But ideally, they would beat, give a catalyst, push the market. Expectations so high. I agree. Expectations are incredibly high, probably the highest they have ever been. So that's just something crazy key to kind of note. Next is kind of the market's other darling is SMCI. You've seen this kind of continue higher, and it had this little attempt of a blow off top, and it failed to displace below this low and has been basing fairly nice. And again, when we're looking at these bases, we're not only wanting to see volume, but what we want to see in the volume is a volume dry up. And so notice the heavy volume up here and then a dry up of volume right here. One of my favorite examples is a firm. A firm is one of my favorite charts, honestly, if it could shape up. It looks like the volume here, and then notice it's just dying. Look at the volume now. So your average volume per day was in December 31 million shares a day was an average volume that you're trading. Oh, motherfucker, I forgot I had a doctor's appointment for my daughter today. And now your average share volume traded is 8 million shares per day. So you're seeing just a dry up. It's going super huge and then a dry up through that, through as it's building a base. Would I be crazy to say that one of the reasons why NVIDIA's order flow is so bullish recently is because institutions have the info regarding a positive earnings report? I think yes and no. So in my opinion, what they kind of, I think, obviously, I think somebody knows something somewhere at all times. You would be naive to say otherwise. So I do think that has something to do with it. But I also, they are kind of, the SEC has done a really decent job of attempting to prevent that from happening, to prevent run ups like crazy. Um, Webby just talked about this on Friday's market. I think it was in the 80s that they actually changed the earnings announcements to after hours because of that reason. So big money can't push the market during before their earnings announcement because they know something. So that's definitely something that can be put into perspective. Yes. So yeah, so look at a firm and look at the angle of this ascent. We're seeing kind of like a failure to really hold below some lows and attempting to, and it's like been kind of sideways at a fairly decent angle. Not just, and when I say angle of ascent, I'm not, this is a steep angle. This is a non-steep angle. So obviously it's geometry. We're looking for less steep of an angle when you're going up or down. So like QQQ or NASDAQ. This right here is steep as fuck and unsustainable. This trend that we're having is very steep and unsustainable. You're not going to hold at a trend line like that for very long. But a trend line, something similar to this, where it is in a good channel, and I'm not saying this is the channel, but something like that, where it's a solid channel starting to come up, go down, swing low, swing high, and really pace itself, similar to this right here. This is a wonderful channel. Boom, boom. Something like that. Some sort of channel to where it comes up, comes down, bases a little bit, comes back up, comes down, not just straight up. And that's what you really want to see for more of a sustainable rally is kind of more of that ebb and flow instead of just skyrocketing. Um, Another leaders. So what I was talking about was leaders. I got a little distracted. I'm sorry. LLY. Nick is going to be very excited that I'm going over this one. It's his girl. LLY. Just a very basic base. Right here. Boom. Right here. Boom. You got your shakeout, 2 day shakeout, attempt to go down, failure to displace, actually kind of gapped up on earnings, filled its gap, went sideways. What it do? Tightened up right here over these 1, 2, 3, 4 days, got pretty tight, right above a 21-day moving average, and now is trying to break out today on mediocre volume. Again, look at the ATR coming down throughout the whole thing. And it's very, very, very similar to this previous base right here, where you could see kind of it come up, just go sideways. Eli Lilly is definitely one that you will have to do equity on. It's such a slow mover that equity is going to be the way to play it if you do. But with this kind of stocks moving groups, we all know, at least we should if you heard me talking a lot, stocks do move in groups. So NVO is one that I've been stalking for a long, long time. I've been stalking this since probably April, right around this level. Now it's finally shaping up. So when we're stalking something, that means it's on our watch list. We have an idea of it. Notice when we were displacing down and going heavy to the downside on SPY and NASDAQ, this was kind of just trickling down and kind of doing its thing, not pushing down too heavy, not doing too much. And the angle of sense very clean, no real displacement, no real fair value gaps created. So going back to ICT, when we can do both ICT and kind of this can slim style that I do, no fair value gaps created to the downside. And then continuing up, you got fair value gaps up to the upside, heavy volume, and looking. Nick said market is breaking out. Sheesh, what in the? Yeah, this looks great. I mean, market's bullish. There's no reason not to be. I think this looks awesome. Hopefully Nvidia's earnings will continue it. I have no clue what the fuck she's doing in there, but she's getting into some shit. Yeah, it took Friday's highs. We talked about it this morning. Friday's highs were the draw. What are you getting into, child? Friday's highs were the draw. So that's where we were looking for. That's what it came. But this NVO, kind of just a basic cup and handle pattern, kind of creating a handle right here. Retest is 130 level, so this is another one, probably coming to 150, 155. Um, I do want to talk about Nasdaq real quick because I do want to talk about this morning. This morning was choppy as fuck, but it played out very, very well. I missed it, unfortunately. I was kind of looking back at it. It was not as clean, but still you could have it was definitely catchable. So we have this unicorn right here, first and foremost. So big old nice unicorn on the 15-minute chart. Definitely a level of interest. We're below yesterday's midpoint, which I was looking to catch below into this fair value gap. So now the market's open. We have our orb. Our orb was to this level here, and it was a fairly clean orb. I mean, it wasn't not the breakout, but the orb itself, the opening range was pretty clean. So we have this. Here's our opening candle. Came down, created a high here, came down, bounced heavy, and then broke out. Broke out right at the beginning of that next 15-minute candle. And then we came back in. And when we came back in, what I was looking for, I was saying, okay, well, let's check the 15-minute chart. And I want to see some 15-minute candles really close above. And we were starting, and my problem was this 15-minute candle here. These high wicks. You have one, two, three high wicks on these 15-minute chart, on these 15-minute candles before finally breaking out. But going into the 5-minute chart, this is where multiple time frames aligning can be difficult. So going into the 5-minute chart, what do we have? We have a breakout of our orb right here. Very, very fucking clean. Just a clean break of our orb. So if you were to do our normal, boom, stop below this low, and then target that next high. So targeting your Asia, and I was mentioning like if we get our orb breakout to the upside, we're going to target London highs. That's going to be our first target. Next target would be Friday's highs, which that's right here, which we actually ended up, we're not Friday's, yesterday's highs, which we actually ended up taking. I probably wouldn't have held it this whole way because I had jujitsu earlier and I don't like to hold shit through that. But besides the point, so like just to these London highs, like let's just say that would have been only a 2 to 1. Okay. So then what I think where the real entry was now that I'm looking at it would be to either get in on this next candle, looking at it saying, okay, we have kind of an upside reversal candle, but we are not below this low. So that low is still our stop regardless. The low that broke out from the orb, the opening range. So that second candle as we came down and kind of we closed, we didn't create a fair value gap, which I was looking for us to create a fair value gap. Let me see, we are over here. But what did we do? We came inside a fair value gap and right to an order block here on the 1-minute chart. So this is where we can really line up. And it was sucked because the 15-minute was still so midsy. It was really wicky, really kind of harder to trade off of, but the 5 and the 1-minute were fucking clean. And then if we look at the 60-minute too, what did we have on the 60-minute? And I mentioned this morning. This was a huge key, in my opinion, right here. Boom. What didn't it do? It did not get the closing candle below that wick. That's what told us that we were going to go up. And that's kind of, I'm looking back at it. This is hindsight, obviously. I mentioned that this morning, just kind of in passing. Um, but yeah, I missed the fucking trade. Not going to beat around the bush. Missed the trade myself. But looking back at it, this is what we are going to do to improve. We look at it, analyze it. Why did we miss it? What happened? What was I looking at? And what should I have been looking at? So we came down. This was the prime entry, in my opinion. Enter right here. Second candle stops below your low. So taking note of where is that low? Where is the low of that candle? Keeping an eye on that low of this specific candle in real time is going to be a huge key. So what I'm going to do is I'm going to start marking the low of the candle that breaks out. And you're if it breaks out to the upside and we never break that low, you are still bullish until it breaks that low. And you are still looking for any sort of reason to buy when it as long as it holds that low. Question, you think a buy stop, sell stop would be a decent play tomorrow? What's tomorrow? What news do we have? Probably with news, but that's a whole different thing. Not with the orb. From my studies of just NVIDIA, yeah, I mean, fuck, you could do it right now. You could literally. So like, this is what I do with those. We have this high, buy stop here, 18,800. Where's the next target? Where would be a change of character? What created that high? Well, this low. There's your sell stop. Sell stop here. This low created this high. This high created the high. So there's your buy stop. You can either do here or even less, um, a little, a little less risky would be here. So that's 18,750. That would be the next level to do a buy stop or sell stop. So either below here, 18,640 or 18,765 or 18,755. There's your sell stops. And then up top here, right above this wick, there's your buy stop. And then boom. And I would just do it with one micro if you're gonna fucking do it. Don't do any minis. I would just do micro. ER not too ER not too big to, is it? Huh? But yeah, so today. Yeah, it's today. It's like in 10 minutes, 15 minutes. And you can with Top Step specifically, I don't know about any other platforms, but Top Step you can hold your trade for till 4:15 or 4:10 or something like that. Immediate ER is tomorrow. Is it tomorrow? Wednesday. Yeah. It is Wednesday. Sorry, for whatever reason, I thought it was Wednesday. But yeah, I'll show you the buy stops and sell stops tomorrow. I'll give you I'll give you the levels. But that's essentially what I would do. The high of the day, wherever, and then where would a market structure shift be? And then you do your sell stop there. My bad, I thought it was today for some reason. What is today, I wonder? Render finna pay. But yeah, this is what I'm looking at with the orb. That's how I'm gonna make it a little better is really dial in. It's like, okay, this is where the low is. As long as it doesn't break the low, we're looking long. And that's exactly what it did. And then right here, let me get rid of some of this other shit to clean it up a little bit. Boom, boom, boom. Right here. These two candles. So we have a swing low. The upside reversal also the huge key. This upside reversal here, that upside reversal above the orb. So we came back down, that retest into that 1 minute fair value gap. That 1 minute fair value gap would have been fucking, that's like the most pristine entry. Like when you really, I obviously hindsight, when you really look at it, this 1 minute fair value gap should get held, and you just put your stops right underneath there or underneath this candle right before. So you could have had a 10 point fucking stop. That would have been like, in hindsight, that is the cleanest entry. So that's what we look for and look towards. I keep track of this. I take notice of this. I screenshot this, and then I put in a file to look at tomorrow morning to reiterate and make me think and remember these different things that happened. Boom, there's your low. You take some heat, you chop around a little bit, and then you boom, you run, you end up getting it 56 points. You literally, and that's why there's your stop. You stop right below this fair value gap. It never got disrespected. And if this fair value gap weren't to hold, it's probably coming to this low. Simple. If it does hold, you're going to continue higher. And then the second 5 minute candle, these 5 minute candles here, right after that fair value gap, what happened? Boom, 5 minute candle, 1, 2, 3 5 minute candles closing outside the opening range. Boom. Regardless of whether you get in here or here or here, any of those wicks or candle closes would have been a great entry. Even if you close your candles, enter on this candle, close here, stop at the same spot right below that fair value gap, you're still at a 3R once you hit the Asia low. So, or the Asia high. So that's where it would have been, how we would have done, how I will do it better. What happened with the orb today, and in my opinion, yes, choppiness, but also poor execution on my part. Just no other way to say it. And one last thing that I noted as that I wasn't sure if it was going to play out was this right here. This high, so we'll delete everything else. This high created this low, and usually on the 1 minute it's a little harder. It doesn't always get respected, this type, this like quantum pivot market structure shift style. The 1 minute, it can definitely, it can be wacky and get some failed breaks. But notice this high created this low, this high created this low, boom, this high created this low, the lowest point. You broke above that and then came down right into a right into an order block that was broken out. So there's another kind of thought process to where, hey, we have shifted bullish. So I got Peep Euro, UJ. So yeah, that's enough of the NASDAQ. Let's go over some Euro, some UJ. Did UJ do what we want it to do, or is it still fucking being a bitch? Nah, still being a bitch. Let me just get rid of all of this. This is such a weird spot for UJ, in my opinion. So we're above our 21-day moving average, so that's a level that should be bullish. This could be a manipulation block, but in a current order flow, so like we have this big old fair value gap here that we've just been holding inside every time we get to it or get halfway up it, like we got to the midpoint, got rejected. Barely came in it, starting to get rejected. Feel like usually coming for that 1.8. I do too. So what's that right here? Yeah, that's where my thought process has been. This is what I agree. So just a current. So we're ignoring this because that's previous order flow. Looking at current order flow, what do we see? We see a fair value gap here and a respect of that fair value gap so far. And so when we see that fair value gap, what is that? That is internal range liquidity. There's also a fair value gap right down here. So if we fail this fair value gap, this is probably the next level we're coming to, is this further fair value. I was honestly kind of curious if we were going to go to this balanced price range way the fuck down here. Didn't even make it that far. So we're respecting this fair value gap. So that means what we're going to want to do is look to see a market structure shift in a 15-minute time frame in order to confirm that we're going back to this level here. On a 4-hour chart here, this has no structure shift until it gets to here. So that's where we have to really break it down to see in a lower time frame how if we can. So then in a lower time frame, we did structure shift way down here. So this was a high that created this low, structure shift, and then continue higher. Let me see a 1 hour. Yeah, we've definitely had structure shifts. Boom, boom, boom. So yeah, we're into this fair value gap, and this just looks mediocre. It doesn't have a great look to it to me. I would like to see, so like in order to go higher, we have, now we're just going essentially a micro trend. This high created this low, so this high would need to be broken in order to come to this 164.8. So then now you dig deep into it even more. Okay, well now we have a lower time frame structure shift. So this high right here, this high, so this high created this low, and then this high created this low. So you're seeing high, low, high, low. So now we shifted our structure. We're in an order block here. So actually, we're not in spread hour. From here, target, really you would target here to start, but minimum target would be this high. Here, probably pull back, like you could target here, then you'd probably pull back a little bit, create another imbalance, and then target that high. But this isn't that far, it's only 36 ticks. So that's kind of what I would be looking for UJ in a very base, really more lower time frame. I think this looks really good. We're respecting bullish order flow. Boom, here's bullish order flow coming into it, creating bullish order flow coming into these coming into order blocks, looking to respect them, and ideally we would create fair value gaps coming out of that. Next would be euro. I don't know why I still look at the euro versus the 6E. Just force a habit, I think. And this is where I get really, really like conflicted. The best word for it. Euro still looks decent to me. Yes, these last 2 days have been mediocre, but I mean, all in all, this doesn't look bad. You're not creating fair value gaps to the downside right here. You tried to get below this low and failed. And now you have two upside reversal 4-hour candles. So this is where this is another reason why I'm really conflicted with UJ, is because euro looks decent. Yeah, it's weird as fuck. Euro and UJ look decent. So it's like when you're in that confliction, it's something that I just generally don't trade. In a very, very, very micro sense, this low created this high. So this low would need to get broken in order to shift your character. to shift your structure. Um, really, I mean, what low? That's not a low. This low here. No, actually, this low. So it made this high. Then you kind of shifted that structure, but then created this high. Yeah, so this was your shift here, right here. Boom, boom. Redo all that. Lower time frame. This is your shift. High, created this low. This low shifted. So as long as this low gets respected, this should now be a strong low. As long as this low gets respected, we would look to continue bullish. So having these two just be so conflicted makes me just like not want to trade it. Let's go to DXY. That'll give you the real answer. Then we look at Euro JPY. I don't even look at any of those exotics. Fuck that. And you can't trade them in Top Step anyway, so I just tend not to. To me, the weekly still looks mediocre. Doesn't really scream to me bullish. There's a small little detail. These small details are kind of key sometimes. You barely undercut that, so we'll see if that does anything or not. Yeah, so even here, we're respecting bearish order flow still on the DXY. We took out this low here. This low came up. So we created this low, came up into bearish order flow. I guess this is a bearish order block. Rejected, created a fair, then continued, came into this bearish order block. So bearish order block here, came right into this bearish order block. Got to choose one. The one DXI. Yeah, I agree. The one DXY is the one you're going to have to choose. So we came into this bearish order block, rejected. What did we do when we rejected? We created a fair value gap. Now what are we doing in that fair value gap? Well, we're rejecting. We haven't even got to the midpoint of it. We got to the midpoint once and can push lower. We're trying to get to the midpoint again, and so far this daily candle is going to close in. Damn, DXY candles close at 4? I didn't know DXY closed that late. I thought DXY closed with 4x. When does UJ close? Hold on. Yeah, UJ closes in an hour. Why does DXY close in close in 3 hours? That's weird. Whatever. I never really noticed that. But so like if we start rejecting here, our minimum we would look would be down here. Internal range liquidity seeks external range liquidity. We came into this internal imbalance right here again. And what were we looking for at that point? External range liquidity down here. So we came up, internal seeks external. We take the external range liquidity. What do we do next? We go to internal range liquidity. What do we do after that? We seek external range liquidity. So most likely, if we are to continue bearish, not only will this low get taken, but this low will also get taken. And yeah, at that point, Euro looks really good at that point. Saturday or Sunday, I like the Aussie. I haven't looked at it since. Yeah, I think Aussie still looks cool. As long as it holds this fair value gap right here, Aussie looks fine. This high created the lowest point. This is Playboy's this is your quantum pivot right here. This high took out the lowest point. Boom, we have a fair value gap here. We come into that fair value gap, then where are you gonna look? Your next high. Really, it's this. Low hanging fruit, I'd probably use, especially with futures, I'd probably use somewhere around here. Just go to a 4 hour, find that next high. Yep. Had a feeling that was a high on the 4 hour. So, boom, your 4 hour takes a low. Your actually shifted structure was right here on a 4 hour. Boom, come up, come to an imbalance. That's respecting bullish order flow. Come up, take so boom, we come up. Where do we go after we take this high? What do we look for next? That next high. Take that high, come into an imbalance. We look to break above it. Boom, take that high. That was looking to this one. Come into an imbalance. What do we do next? We take the next high. So that would be here. So if we get a small little push down, and again, NVIDIA will probably fuck everything before or make it worse before a entry really gets good. But that's kind of what I'm looking for. Bare minimum here and then coming to here. The structure and the thought process is there. We'll see if it actually gives any sort of fucking entries. And he said long gold, yeah, fuck. Gold looks like a long still. Just a basic cup and handle base. Ideally, so again, this is back to our can slim style. You have your cup. Let me see how many weeks this is. Cup and handle base should ideally be 7 weeks long. 6 weeks long. So the best case scenario, this week we do not break out. We hold this base this week, form a today's Tuesday. Fuck. Tuesday, Wednesday, Thursday, Friday. So a 3 more day of a candle. Thank you, baby girl. I don't know what I need to do with this, but okay. Wait, so NVIDIA can absolutely fuck everything depending on direction. Yeah, NVIDIA will make or break every single setup I'm showing you guys right now. Unfucking fortunately. It will either make them work or it's gonna fail them all. That's the problem right now. Ideally with gold, like I would want to see a little handle. So like a 4 day handle. Come to Tuesday. Next week's uh a short week too, guys. That's gonna be. Where's my book? Can you take my book, child? You did take my book, you fuck. So next week's a short week. We're already at an hour. Fucking I'll go over the seasonality tomorrow morning. So make sure you hop into stream. I'll go over seasonality for Memorial Day specifically tomorrow morning in stream. But for a technical handle, you need 4 days. So 4 days for a cup and handle to be a handle. And that would be if we get a slow declining handle to about here, 2400 again, hold that round level. Then gold is probably, I mean, I think it was a 2500, 2550 target on gold, we said. Let's look. And we just used our fibs. So I do standard deviations for pretty much all my targets. It's the easiest way to do it. Yeah, 2560 roughly, 2550 target for gold next. And notice we came up, we had our standard deviations. You can even drop this. I mean, it's all discretionary, obviously. I like 2550 better because it's a round number. But we came up, blasted past that half standard deviation, created a fair value gap on the weekly chart. Boom, came into it, respected that fair value gap on the weekly chart, came up, is most likely going to create another fair value gap, and then likely be looking to continue higher to this 2500 level. Fucking, I'm playing NVIDIA earning tomorrow. Yeah, NVIDIA is gonna be crazy. It's gonna be tomorrow's intraday is probably gonna be boring as shit. Just probably not going to do much. You got FOMC minutes, so it probably won't make too much of a move, but you do have FOMC minutes tomorrow at probably 2 o'clock. I haven't even looked. Let's look. I forget that TradingView has this. Inside its orb all day. Yeah, it's going to be that type of day. MBA, BOE, existing home sales, mediocre, mediocre, mediocre. PPI, where's FOMC minutes? 11 o'clock my time, so that would be 2 o'clock market time. So we will have FOMC minutes tomorrow. I don't know how much it's going to do anything. I honestly don't think it's going to do much. I personally think that Nvidia earnings will outweigh the FOMC minutes, and the market is like all eyes on Nvidia. Everybody's going to be watching it. The whole freaking world is going to be watching Nvidia tomorrow after hours. That's going to be the biggest make or break of anything that I've showed today. It's gonna be it's definitely gonna be interesting. And I'll post in stock chat tomorrow the the lotto degen limits. If you guys do want to play limits, I will post them of what the best places to put them on. I would put limits. So that's what I got for you guys today. If you got any more tickers for me to look at, let me know. If you have any other TA that you want me to analyze, let me know. I know somebody said Renner earlier. I think this is probably bullish as fuck. Yep, this looks phenomenal. See, this is honestly, this is the same style. Boom! Look at the amount of accumulation weeks versus distribution weeks. You have more accumulation weeks than distribution weeks. One, two, three accumulation weeks. This week is accumulation week because it's a support week. That's four. Even though it's a down week, we closed at the highs. So like this thing is fucking monster. This is all your CAN-SLIM principles that I go over that I teach. You're at more than a 7 week base. It's another thing that we look for. So it's got everything we're looking for. This is phenomenal. I think also my next favorite chart that I've been watching is not neat. What the fuck is that? Near similar setup. That same kind of boom, respecting this order flow. Little cheat entry right there. Oh fuck. So near's another one. If the market wants to go crazy and continue higher for crypto, I think near will be good. So on that note, I gotta call the fucking doctor that I was supposed to go to today that I completely bailed on. So, any other questions or takers for me to look at? Let me know real quick, and I can go over it. If not, I'm gonna be out of here. We will be back at it tomorrow morning. Even if it's gonna be a slow day, we'll be on just checking it out. And tomorrow morning for at market open, both our AI coins so positive. ER tomorrow will lead to a breakout. That's perfect. Is it AR? Only red crypto coin. This looks like near. You got like a little squat manipulation. A squat is a manipulation. It's a Mark Minervini term. When you break out and then you come back out, he calls it a squat reset. That's a manipulation in coming into a fair value gap usually. All these terms have been are just kind of I still think of them sometimes with the older ways that I learned. So yeah, so far this looks like a squat reset where it's trying to break out, should hold for a couple more days, and then obviously Nvidia is going to be the detriment of what's going to move it. Ethereum, fucking bananas. Actually, Ethereum Bitcoin I was looking at yesterday looked fucking really good. And the key to me is this right here. All of these, especially this one. Boom. We do not have any displacement below this specific low. Now we closed the candle below that level, but did not displace below it. So now this candle can be considered a manipulation block because we also are a change of state in delivery. And that means we would probably look for up here, bare minimum. You also have on a daily chart or weekly chart, not daily chart, a market structure shift. So we took this high, took down, took this low, created the lowest point. So now this is a strong high. We now broke out from that high, looking to continue. Ideally, we would hold and close this week above this high. Next week, either continue higher or create a fair value gap by going sideways. Most likely sideways because we do have a short week next week. And then come into the fair value gap and then look for here. So that's kind of what I'm thinking. I think Ethereum is going to continue to stay strong. All right, guys. I appreciate you all. I'm gonna head out. At me in chat if you need me to check anything out, or if you have TA that you want me to look at and you want me to analyze and say, hey, you did this right, this wrong, whatever. Feel free. I'll go over it with you. Feel free to DM me with it. Whatever's clever. I appreciate you guys. Enjoy the rest of your day. I'll see you guys tomorrow on stream, hopefully.